What if I told you that the most important stablecoin in your portfolio is not actually a stablecoin at all? Imagine a world where the US dollar isn't backed by a central bank's printing press, but by the mathematical certainty of the world's largest derivatives markets. We are currently witnessing a historic shift in how we define money on the blockchain. While most investors are chasing the latest meme coin or staring at daily candles, a select group of institutional whales has been quietly accumulating Ethena ENA throughout the start of 2026. Ethena isn't just another crypto project, it is the foundation of what many are calling the internet bond. Today we're going to strip away the hype, ignore the price noise, and look at the actual architecture that could make ENA the most massive opportunity of the year. We'll decode the true value proposition of the ENA token, explore why it's redefining the stablecoin market, and reveal the specific factors that long-term investors are using to project a massive breakout in the 2026 bull cycle. Cutting through the noise is the first step. ENA's price movements often distract from its core innovation, USDe. Unlike Tether or Circle, which hold fiat in traditional bank accounts, Ethena creates a synthetic dollar. This internet bond is capital efficient and, most importantly, censorship resistant. It doesn't need a permission from a bank to exist, it only needs the Ethereum network. Understanding this shift from fiat-backed to crypto-native is the difference between being a speculator and being an investor in the future of finance. Is the market mispricing ENA because it's looking for a stable coin, when it should be looking for a global yield-generating machine? How does a digital asset stay pegged to the dollar without a single dollar in the vault? Welcome to the engine room of USDe. The secret sauce is a strategy called delta hedging. When a user deposits collateral like staked Ethereum, USDe, to mint USDe, the protocol simultaneously opens an equivalent short position in the perpetual futures market. This creates a market-neutral or delta-neutral position. If the price of ETH goes up, the value of the collateral rises, but the short position loses an equal amount. If the price of ETH crashes, the short position gains exactly what the collateral lost. This balance is what keeps USDe at exactly $1. But here is the massive 2026 opportunity. Because the crypto market is structurally long, people are willing to pay a premium to hold long positions. This means Ethena short positions collect funding rates, essentially getting paid by the market to stay neutral. Combine this with the native 3 to 4% yield from staked ETH, and you have a stable asset that generates 10%, 20%, or sometimes 30% APY. As of January 2026, with the market entering a sustained uptrend, these funding rates are hitting historic levels, turning USDe into the most profitable, safe asset in the ecosystem. Why would anyone keep their money in a savings account when the futures market is literally paying you to keep the dollar stable? But let's be intellectually honest, high yield always comes with risk. In the world of Ethena, the black swan isn't a bank run, it's negative funding. If the market turns so bearish that shorts have to pay longs, Ethena's yield could vanish or even turn negative. We saw a stress test on October 10, 2025, when a market rout caused a temporary depegging to 65 cents. However, the resilience shown since then has been remarkable. Ethena has fortified its reserve fund, which acts as a buffer to pay out those negative rates without touching user collateral. Another concern often raised is centralization. To execute these hedges, Ethena relies on major exchanges like Binance and OKX. To mitigate this, they've partnered with Kraken Custody and other institutional-grade off-exchange settlement providers. This means the assets stay in decentralized custody even while they are being used to margin trades on centralized venues. Through continuous audits and the transparency of the fee switch mechanism, Ethena is proving that you can have institutional efficiency with cryptographic security. Can a protocol really survive a crash without a central bank bailout? Or is Ethena's reserve fund the new lender of last resort? As we look toward the remainder of 2026, Ethena is expanding its strategic horizon far beyond simple stablecoins. We are seeing a massive convergence of SuFi and DeFi. Ethena has recently moved beyond Ethereum, expanding USDe as a stablecoin as a service across multiple chains like Solana, BNB Chain, and TON. By integrating with neobanks and payment providers in over 45 countries, USDe is becoming a legitimate tool for global remittances and savings. The real game changer for ENA holders, however, is the SENA Staked ENA incentive. By staking ENA, you aren't just voting on governance. You are positioning yourself to capture a portion of the protocol's massive revenue. With USDe's market cap recently crossing the $10 billion landmark, the fee switch is generating millions in protocol profit every week. Furthermore, the launch of the Converge blockchain network, where ENA serves as a validator staking token, gives the asset a level of utility that very few DeFi tokens ever achieve. What happens to the price of a token when it stops being a governance coin and starts being the dividend-paying stock of the internet? So what is the final verdict? Is Ethena a speculative gamble or a foundational piece of the crypto future? When we look at the trajectory of finance, we see a move away from opaque systems toward transparent ones. Ethena represents a paradigm shift. It takes the trillions of dollars in the derivatives market and turns that energy into a usable, stable currency. It is the first project to successfully tokenize a carry trade at a global scale. As the 2026 bull run intensifies, price predictions for ENA are reaching for the $2 to $3 range, backed not just by hype, but by a 450% increase in network revenue and institutional adoption. Ethena isn't just surviving the future, it is building it. Whether it's through the Nasdaq listing rumors planned for late 2026 or its role as the data layer for new DeFi primitives, ENA is positioned as a sleeper giant. The opportunity isn't just in the price, it's in being part of the protocol that finally separated the dollar from the bank. The landscape of wealth is changing, and those who understand the engine room of the new economy are the ones who will lead it. If you found this deep dive into the 2026 Ethena opportunity valuable, hit that like button and subscribe to stay ahead of the next big move. We are dedicated to bringing you the most insightful research-backed blockchain analysis so you can turn knowledge into wealth. Take full control of your crypto with Ledger Live. Manage thousands of coins and NFTs securely in one place. Buy, swap, stake, and grow your portfolio with ease. Trusted by 7+ million users, Ledger Live keeps your assets safe by integrating with Ledger hardware wallets for maximum security. Say goodbye to third-party risks and hello to true financial freedom. Download Ledger Live now. Click the link in the description to get started. The information contained herein is for entertainment purposes only. Nothing herein shall be construed to be financial, legal, investment, or tax advice. The content of this video is solely the opinions of the channel owner, who is not a licensed financial advisor or registered investment advisor. Trading cryptocurrencies poses a considerable risk of loss. Please use your best judgment when dealing with cryptocurrencies and don't invest money that you cannot afford to lose. The channel does not guarantee any particular outcome.